Let's talk about self-employment income and how it relates to home loans and what it means to qualify for a home loan most specifically. So first and foremost, let's establish what a self-employed person is. If somebody owns 25% or more of a company, they are considered self-employed in the mortgage industry. So that means if you own 24%, you're technically not self-employed. So 25% or more makes somebody self-employed. And yes, I have a buddy that I did a loan for. He owned 24.9%. So he was not self-employed. We were able to get that done in a very, quote, easy way because, again, he's not a self-employed individual. So what does it mean to be self-employed? Well, whether you're a sole proprietor, meaning no company, it's just you doing your thing. As a sole proprietor, you are 100% owner of that income, and therefore you are self-employed. Or whether you're the CEO of a Fortune 500 company, that if you own more than 25%, then you are self-employed. So from the really big to the really small to everything in between, it doesn't matter. If you're 25% owner or more, you are self-employed. If you are part of an investment where you put money in and somebody else is running it, and you own more than 25%, that'd be one of those that are probably considered self-employed. But again, it's harder because if that's truly just a passive investment, that's a little different. But call us on that part and we'll talk you through it. So let's talk about what it means to be self-employed. So as self-employed, the stigma, probably the norm, is that people do take a lot of tax write-offs, and that's always a concern, right? Being somebody who's self-employed myself or has been, owning rental properties, all those things that made me self-employed. You worry about, okay, I'm writing all these things off, and so can I qualify using my, quote, normal income? So the answer is it just depends. There are certain tax write-offs that we can add back, like depreciation, depletion, home office use, things like that. There might even be, on rare occasions, like big expenses for a business that you can add back. That's a one-time expense. And if you can explain that, we can look into that. But ultimately, calculate self-employed income. There's formulas, and it can vary everything from, whether it's a 1120S to, whatever it is, whether you're C Corp, S Corp, LLC, partnership, whatever it may be, whatever tax form you use, 1065s, blah, 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 all that stuff, right? We are going to, how your company is structured, whether you're sole proprietor or how its company structure is going to change what and how we calculate qualifying income. And that's not the scope of this video. We're not here to teach you how to do underwriting calculations and make you a mortgage underwriter in a video. But understand that we are going to look at that. And by the way, just because you are W-2'd, if you're a W-2'd salaried person, you still can be self-employed. I got people like, I'm not self-employed, I'm a W-2'd salary. Yeah, but you own the company. So that 25% is not how you're paid. It's do you have that ownership piece? And we're going to look at your K1. If you are, if you're an LLC or something that's incorporated, we're going to look at your K1 to figure out what that percentage is. We'll probably reach out to your accountants to have them confirm, to verify, and check out. There's a qualifying income section or a self-employment income that we've done. So if you want to find out more about those details, you can. So again, check all that out, see what we can add back. There are programs, just so you know, if you say, man, my tax returns are they're beat up. I deduct everything I possibly can. I can't do it. The good news is there's programs for you out there as far as how to qualify. You can use bank statement programs, whether it's 12 months of bank statements or 24 months of bank statements. That's where we use your income or calculate your income based on just deposits, not necessarily the bottom line or tax returns. So there are programs out there for self-employed individuals that don't necessarily need to look at the tax returns. Another question we always get is, how long do I need to be self-employed? The generic answer is 2 years. And it's not just 2 years. They typically, in a perfect world, would like to see 2 years of tax returns, which means you got to be self-employed for longer than that 2 years. So understand that that's a generic answer. I've done one where a buddy of mine was self-employed for 9 months, and we were able to get him a loan. So in that instance, he worked initially, he was an IBM employee, and he was contracted to an airline, one of the big airlines. And so he was contracted there. Well, guess what? After about 4 years of working there, the airline and him basically said, hey, why are we paying IBM this premium? And let's go ahead and just pay you, employee, more money. And what it did is it actually saved the airline money because they didn't have to pay IBM that margin that they were charging. So they paid less. The employee got more. And they did it. Well, after 9 months of being self-employed, the nice part is they did it in June, the year before. We did the mortgage in March. which meant he had 6 months of tax returns filed as self-employed as a 1099 contractor. Well, we were able to then see that basically he didn't have any write-offs because he literally did the same thing. He got up and went to the office and doesn't really have like your typical self-employer quote self-employed expenses, right? So we can validate that it was the same job, same pay, same boss, same all that stuff. So there are exceptions that can be made based on make sense opportunities. But for somebody to quit, go to 1099 and all of a sudden become 100% commission or 100% eat what you kill, like the guy was still W-2'd in the sense that he made the same amount all the time, every time. So he wasn't W-2'd, but he had the salary to show it. But if you're saying, hey, I'm going to quit this job and I'm going to work for the same company I've worked for 18 years, I'm now going to consult with them. If you don't have a long-term contract and you don't have some tax return showing that there aren't any expenses, that unknown is enough to make it say, man, we can't issue you a loan, which is why that 2 years typically reigns true. So you can technically get loans maybe at 12 months or 24 months. Again, it's just going to look at the big picture. What is it? Give us that scenario. So hopefully that kind of answers a little bit about what you need to know from a self-employed person as far as what makes you self-employed. And then two, check out the qualifying income. We go a little deeper on what that looks like and what that means. But truthfully, just reach out to us. The Mortgage Mark team's certainly going to help walk you through it and get the scenarios. And we won't know probably until you actually give us the income documentation. We can't just answer a few basic questions and say you're good. We actually have to see what we're looking at or see what we need to look at and just make sure you're good. So as always, we appreciate you. Reach out to us if you have any questions. And as always, when you think mortgage, think Mark.